All right. Well, thanks everyone for being here and much appreciated. I hope everyone's getting through the summer. It's been a kind of a quiet summer in the markets. For the most part, I think what we're seeing is a bit of a digestion period. In fact, the best way to kind of show you where we're at is by kind of showing you a little bit the sort of performance of things. And, we're even just if you look at today, if you just look at the US equity sectors today, what you'll find is that it's essentially a a market of two tails. Number one is we are certainly seeing tech once again weak, which is I think yesterday the Nasdaq or the tech sector was down 1.7 today, another 1.4. So we're seeing a mean reversion. And so what I would like to point out is that we're very much in a momentum market. Now, what does that mean? Well, if you look at our year-to-date performance of asset classes, what you'll see here is, and this is again, this is not something that either I think many people are hearing, and I quite frankly don't think people want to hear this, but here's the hard truth, like it or not, but Mag 7 stocks, yes, they're up 7% on the year. The S&P's up 9%, but it's more or less being beaten by just about everything else. And obviously, obviously there's stuff underperforming that, but for the most part, it's pretty crappy what Mag 7 stocks are putting together. So what I would like to point out is that there is momentum, but the momentum is moving around different parts of the market, whereas for a couple of years, the momentum was really just in a few stocks. And what's happening, this is a little bit beyond maybe the sort of the today's discussion, but we are seeing at the margin a rebalancing of global, large global portfolios of U.S. assets. We have an epic overallocation to U.S. equities globally, and certainly also to on the rate side. So what we are seeing, particularly on the equity side, which is probably more of interest to listeners here today, is a rebalancing, and that's why you're seeing these Mag 7 stocks not outperforming this year. In fact, they're underperforming certainly against all hard assets, European stocks, Asian stocks, and a whole bunch of other stuff, by the way, just as an FYI. Now, the reason why this matters in our view is that momentum, which is fleeting in and of itself, as a strategy, moves around between different sectors and different stocks all the time. And I think the risk here for a lot of people and the opportunity at the same time is being aware of that. So what I'd like to share with you guys today, this is yours truly here, by the way, sitting at my desk, is that as someone who's looking at the markets through the lens of global macro cycles, I think it's critically important to respect the fact that at some point the momentum game starts moving to different parts of the market. And again, this is exactly what's happening so far this year. As you've probably heard other people say before, trading and investing is risky. So please make sure you get educated on it. Don't just treat it as as entertainment. It is important. And so everything I'm going to talk to you about today, what I'm about to show you, is purely educational. None of this is meant to be advice in any shape or form. So please be aware. So let's quickly review what I just kind of alluded to, the year of the trader. Now, it's in full force. The year of the trader is something that we talked about a little bit less than a year ago, about maybe 10, 11 months ago. Yeah, we said about that this is going to be a year of the trader. And actually, last November, I mentioned this. And we have certainly seen that. And, some of the things that we're seeing is, for example, even just on April 9th, right, we had momentum buy signals trigger literally like 45 minutes before the sort of the tariff relief news. Same thing, if you guys might recall, this was, gosh, I'm going to say about not quite a month ago. No, maybe a little bit less than a month ago. We had news around copper. That too was or something that was highly predictable from the perspective of momentum. Now, what I see, just before we get into this, I see a lot of people losing a lot of money in general for a number of reasons. But for the most part, they're either frozen or making chaotic choices. And making chaotic choices can work in raging bull markets. The problem is when that raging bull market starts to change. It doesn't have to be a bear market, but just if it takes a different characteristic. And that's quite frankly already what's happening this year. So the market isn't necessarily too chaotic or too volatile to make money. I think it's at the end of the day, it's what that people don't have a repeatable process. And so even in all the chaos, for the most part, there is still order. And order is basically having a repeatable process that takes into account repeatable patterns. And so I'm just going to skip right to it here so we get to it. I think when it comes to the markets, there are a lot of different ways to trade and invest in the markets. You think about fundamental analysis, structural analysis, technical analysis. There's analysis that goes way beyond even what a lot of people are aware exists. There's astronomy being used in markets, to maybe point to something a little bit more, esoteric, I guess, for lack of a better term. And so there's a lot of different strategies and a lot of different indicators. What I find is that most people don't make money in the markets, or not as much as they would like, because they are too much all over the place. And so what I would like to show you guys is something that I think, if I look back at my now 26-year trading and investing career as a professional, and still portfolio manager to this day at our investment advisory firm as well, is that when I look at what people do, it's one thing they can understand is something called momentum, meaning a stock is likely to go up or likely to go down. I think a lot of people have a difficult time pretty much understanding much else and don't have a whole lot of patience for anything else. It's certainly in this day and age of the gambling bubble and the bull market we live in. However, that doesn't have to be bad news. It's actually good news because momentum strategies work, at least if you do them with a proper mindset. So let's have a quick definition of what actually is momentum. Momentum, if you look at it through sort of a lens of a definitional lens, through the lens of engineering maybe, or physics, and I'm sure some engineers in here will either nod or correct me a little bit here, but basically the mathematical formula for momentum is m times v. So m being the mass of an object, and the v being the velocity. So not geeking out too much, we can look at it in very simple terms, which I prefer anyway. Looking at a car, let's say a car is driving along the road 45 miles an hour, let's say, and then is speeding up to 75 miles an hour as it pulls onto the highway. That increase in speed, that acceleration, from a stock market perspective, I define that as the momentum, right? Increasing the speed. So going from speed X to speed Y. The reason this is important is because stock market momentum, and I'm going to again skip on to another slide here, is actually something that's fleeting. And so as a trader, for those of you here that consider yourself to be traders, be that full-time or part-time or something in between, what you are really most likely looking for is a change in speed. You're looking to be putting on a trade that takes advantage of momentum. Particularly if you are here and you are using single name stocks, ETFs, options for sure, and certainly futures, you are really actually looking for momentum. And the best way to explain that to you, before we go into examples here for the here and now, is using this here chart. When we look at this chart, I think everyone can see, hopefully you can see two green arrows. There's a very long one, that's the green sort of lighter arrow that goes from the lower left to the upper right. That is what we consider to be a trend, a longer standing trend, which works. We buy the stock, we hold it, maybe we do some stuff along the way, but that is a trend. And at the end of the day, most wealth in people's portfolios is being built by being in trends that are long-lasting and sturdy and trustworthy. However, a lot of people are interested in doing some trading along the way. But what I see is a lot of people that have that goal are sort of mixing up the trend and the momentum signals. And so the momentum, as you can see, which is the darker green arrow, has a very different function. It's a shorter term move, and it's a very vicious move usually. So momentum is typically sharp, but it's fleeting. It comes and it goes. And I think that is typically what people don't understand. Now, if they understand it, and once they get to the point of understanding it, it opens up a whole different mindset and a whole different set of opportunities. Who in here consider themselves to be a trader, and you can see the point of using momentum? Give me a quick yes in the chat box, because the thing with traditional momentum indicators is that they typically are lagging a little bit, which can lead to more false signals, which of course can lead to frustration, and that in turn leads to a bit more losses. And then these indicators or these signals typically are not as quickly as they should be, as fast as they should be, to adapt to new momentum moves. And that's why we developed something called the TST Trender Indicator. And I'm going to show you guys right now what that is so you can see it. We can go into real examples, and then I would be more than happy to give anyone in here access as well that would like to have that indicator on your charts. Now, the Trender Indicator, when we started developing this, while I was at JP Morgan as an investment banker, we were trying to find out, among other projects, we were trying to figure out what constitutes when an algorithm is looking to come into the market to buy the stock or the ETF or whatever it might be. So if you look at the world of trading right now, most of the volume throughout the day, certainly on the NYSE and other parts of the market too, is driven algorithmically or at least automatically. And so those are the big machines, the big forces that are pushing markets around. If we can have at least a basic understanding, or even just an inkling of what, or at least one input, a critical input into the algo's decision making to buy or sell, we have a huge edge on many other market participants. And that's exactly what I'd like to show you guys right now. Okay, so that's what we are going to show you. Now, as we start looking at the market here, I would like to ask anyone if you have any ticker symbols that you would like to see, to please just type them in. John, I think you're good. You don't need to hear this if you're using the Trender, unless you want to learn more about market momentum here as a non-member. So let's have a look at this again. We're going to look at any signals you guys have as well, but I'm going to start off with one stock that I know has been on a lot of people's radar. And what I would like to share with you with this stock, this is CrowdStrike Holdings, CRWD, is a repeatable pattern through the lens of what we call momentum. Now, again, when we look at the world of momentum, what we want to do is we want to understand that these algorithms, these machines, they come into the market to buy or sell. Now, all of them are looking for, they're not all tuned the same, but a lot of them have very similar inputs, at least to some extent. And so if we can determine when these things are coming into the market, we have a pretty good idea of what the market might do. So if you look at CrowdStrike, for example, I purposely went back a little bit to basically encompass most of this year to January of this year. Now, I will explain, there's basically three things going on here, or four things. We've got green and red arrows, so buy signals and sell signals. We've got green dots and red dots. The green dots are profit targets. The red dots are stop losses. Now, we have designed this indicator so that it has an automatically built in what I call a free profit target. What is a free profit target? A free profit target is designed so that we, as quickly as possible in any given trade, any given momentum trade, get to a point where we are in a position of no longer being able to lose money, or where it becomes very difficult to lose money. And so if we look at CrowdStrike, just to give you an idea, if we simply go from signal to signal, if all we do is buy a stock or an option, we can talk about options too if anyone likes derivatives, which is really, if you're trading options, stocks or ETFs, you're in the momentum game if you're looking for directional moves. So let's assume all I did since January is use momentum as my indicator. Let's see what this would have meant for this one ticker, CRWD, just using one momentum indicator. So I would have bought, in that case, on January 16th, I would have bought it on January 17th. I would have bought CRWD. I reached my free profit target, about 8% higher, a few days later. At that point, I want to sell half of my position. So if I bought 2 options contracts, 2 shares of stock, or pairs of 2s, right, 4, 6, 8, 10, what I want to do is I want to close half of it at the free profit target. Why? How many people in here have ever put on a trade and you were making some money, but ultimately it went against you and you had a losing position? Give me a quick yes in the chat box in capital letters if that has ever happened to you. Type in YES, maybe with an exclamation mark if that's happened to you. I'm raising both hands, by the way, right now. That's certainly happened to me. It happened to me way too many times. It happens to everyone, right? The reason we have the predetermined free profit target and the predetermined trailing stop as the signal print, so it happens automatically, is because of exactly that reason. So in this particular instance, if all I did is use momentum as my guiding indicator on CRWD since January, here's what would have happened. I would have bought the stock. I would have gotten rid of half the position with an 8% gain on the stock, of course, way more if it would have been options. And I would have gotten stopped out with the rest of the trade for a gain of 10%. Okay, so that's a 10% gain, on this trade. So that's just a stock, right? So with options, typically I say it's a 3 to 4 or 5x of that, but I'm going to use the stock here as an example because I think options are just a derivative of that. So that's 10% gain. Then we had a sell signal. Again, the free profit target was reached, and then we had a buy signal. So I would have gotten stopped out for a loss of 2.5% on the second leg, a gain of 7.5% on the first. So let's say a gain of 5% on that position. Okay, so now I'm up 15%. And then I had a buy signal that became valid on the 15th of April. That one, if I held it just until the sell signal came, it was a gain of 23% right there. So 3 trades since January, a total gain of 15 plus 23. Even I can do that math. That's about 38% of gains. 3 trades since January. And options, again, typically, as I say, 3, 4, 5x that, depending on, of course, what options. Now, this is a swing trade. We're going to look at this also intraday. But if all you do, and I'm giving you the simplest way to do this, right? Ideally, we use the trailing stop, which is the purple line, which I'll talk about in a bit. But if all you do, I'm giving you the most conservative possible way of using this, which is not as efficient as you would do if you use the trailing stop. But if all you did is buy at the green arrow, take the free profit target, close half the position, and then sell the rest of the position at the sell signal, these are the results. What about the S&P 500? What about the S&P 500? Okay, let's see. Okay, so let's just go back a little bit. S&P 500. Oh, I have to adjust this. This is set to a different time frame. So here we go. All right, let's say if all we did with the S&P 500 since, let's just go back to let's say February. Okay, if all I did is use the S&P 500 since February. There was two signals, literally just two signals. All right. We had a sell signal that came on the 25th of February. And if all I did is close half the position at the free profit target, kept the other half the position, and sold it there, would have made about 8%. That's the S&P. I could have bought put options and would have made about 3 times that much, or maybe even more. I'm just giving you a very conservative way of looking at it. Then let's say I went in and I bought at the next buy signal. So not only did I close my short, then I bought and went long the S&P. I would now so far still be up about 15% in the S&P. So that's 50 or yeah, let's call it 15%. I think we're down a touch today. So 15% just to be very, very transparent and conservative. The question is, what has the S&P done year to date? The S&P is up about 9%. That's 2 trades since February, just 2, and up 23%. Okay, are you guys following this so far? Give me a quick yes if this is making sense so far. What about Roblox? Okay, let's have a look at Roblox. All right, so here is Roblox. I was looking at this stock earlier myself, actually. So let's just go back a little bit and just a little while here. Just I did this math actually for a client a little while ago. So that's actually a good example. Okay, so here's Roblox. Let's say all I did is I bought the stock with a momentum buy signal in October of last year, and I held it after the free profit targets reached, and I held it all the way until the sell signal. It's actually more than 30%. It's actually no, it's about 30%. So that's 30%, one trade. Then I had a sell signal. If all that did is hold it until the buy signal, that's 8%. Then I had a sell signal, and then a buy signal that would have been in probably a scratch trade, no gain, no loss. And then we had a buy signal that came. That's about a 95% gain. Actually, let's see. No, I think it's less than that right now, because now we're actually getting a sell signal. Let's just be very conservative and very transparent, very honest here. Buy signal, if all I do is hold it until the sell signal, that is a 98% gain. Sorry, actually, it's a bit more actually now. So it's 98% gain, okay? So if this sell signal today holds by end of day, if I would have done just 4 trades with Roblox, 4 trades because it was scratch, 1, 2, 3, 4, you can see that's up, let's call that's 140, 135, whatever ish percent of gains. 4 trades since November of last year in Roblox, 1 ticker. Give me a quick yes if you guys can follow this. What about the NASDAQ 100, the QQQ? And then if you guys want to, I'm happy to show you this also intraday. If anyone here is a day trader, if you're a day trader, maybe let me know if you could let us know about that, and I'd be happy to look at it. So let's look at the NASDAQ 100 again. Let's just go back to February, so we're capturing this year. We had a sell signal, free profit target gets reached, and if all I did, and again, there is a more optimal way of using this, which is by using the trailing stop, which is the purple line. But let's say all you did is the most conservative way is sell at the momentum sell signal, buy at the momentum buy signal. That's 8% right there. And then we had a buy signal that became valid on the 29th of April, and that one remains valid. And yes, the Qs are up now 20% here. So what did we see here? This was 8% plus 20%. So that's 28% with 2 trades in the QQQs, right? That is it. What about NVIDIA? Let's have a look at NVIDIA. Of course, I know NVIDIA has a little bit of selling pressure the past couple of days, bouncing off the lows here today. Why not, right? But let's have a look at NVIDIA. Let's just see what's going on here. I did this math too, actually, for a client a little while ago. So that's obviously a popular stock. So let's just go back here and look at, capture this year, right? So since that's the thing we're doing. So this is NVIDIA. We had a buy signal there, free profit target reached, but then it gets stopped out for a loss of 6%. So I didn't yet calculate. So yeah, okay, 5 or 6, whatever. So let's call it -5. Then we had a, so that's this trade here. Then we had a sell signal that if all it is hold that until the next buy signal, that's a gain of 6%. And then we had a buy signal that started on the 2nd of May. And so far the stock is up 52%. So let's I have to update that 52%. Again, we do not yet have a sell signal. We might get one soon, but we don't have one yet. So it still remains bullish momentum. Does that make sense? What about Coinbase? Well, let's have a look at COIN. So, all right, let's just look at the past few months here. So Coinbase, I would imagine we got a buy signal. Yeah, so we received a buy signal in Coinbase momentum on the 23rd of April. If all I did is go to the free profit target and sold it when we received the sell signal, that's a 61% gain just based on momentum. Again, that's a very conservative way of using this, right? We want to use, ideally we use the trailing stop, and there's a rule for that. But if all I did is use momentum, these are the results factually. I'm not hand drawing these arrows in here. This is being printed as the stock goes. What about MSOS? And there's more tickers. I see there's more tickers coming in here, so I'll type those in as well. MSOS, let's just go back a few months here as well. So if all I did, and I need to adjust this one here, excuse me. There you go. So if all I did here on MSOS is buy the stock, or this is an ETF, actually it's a cannabis ETF, I buy it, I take half profits when it reaches a free profit target. That would have been probably an 8% gain there on the first one. I'm not going to draw this, an 8% gain. This one would have been an 8% gain, so another 16%. And then we had a buy signal that triggered on July 3rd, and so far it's up 85%. So 85% here, and then 8 plus 8, so 16, 85, call that 100%. Same thing for day trading. We'll talk about day trading in a second. I just want to make sure we cover all the other ones. And I have to just quickly be adjusting this because I have a different screen resolution, and if I don't move it up and down, it changes the screen, and that's a pain in the ass. So let me just share. We'll go through day trading as well. Mary is asking, but let me just make sure I address the questions. I think there was a few other tickers there that I haven't yet gone through. So give me just a second. Okay, so let's say Riot, RIOT. That is a ticker that Paul wants to look at. So here's RIOT. We received a buy signal back on the 2nd of May. And if all I did is hold that stock, I took the free profit target and I held it until we reached a sell signal, that's a 34% gain. Again, that's the least optimal way of using it. But I'm trying to show you the most conservative way of using it. We've reached a sell signal since, but we don't have a buy signal yet. Okay, so we're currently this trade here now, the latest position is now down 3.9%. Okay, let's see what other tickers there are. Mara, sure, let's have a look at that one. This is MARA. This one's also for Paul. Okay, Paul. So we had, let's see here. So this one here had a sell signal, reached a free profit target, then the rest got stopped out for a loss of 7. So we had a profit target at 7% for the first half, lost 7 on the second half. So that's a scratch trade. Then we had a buy signal, reached a free profit target, and the rest got stopped out for another 7%. So that's 7% overall. And then we have a current position that's now up about 8%. So 7 plus 8 is 15% or so since the past few weeks, just July. That's just one. And again, if I would have used options, that would have been about roughly about a 3 times those results. Now, let's talk about intraday. I know there's a lot of people that want to use this intraday as well. And by the way, I should tell you, I use this intraday myself. Okay, why don't we go live here right now? So here is a live chart of the S&P 500. This is the SPY ETF. I could pull up the futures, the E-mini futures. I could pull up NQ futures, whatever. It's all the same thing, okay? This is a 5-minute chart. Personally, I like to use this on 5-minute charts for day trading. And here is the situation. So again, we had a sell signal. This is this morning. You can see today is August 20th. We had a sell signal and it reached the free profit target. Now, the only difference that I personally have between day trading and swing trading is these targets are not really my free targets, but they are, for the most part, for day trading purposes, they are my final target. I can always trail it a bit more, right? But that is where I want to take most of the position off. So this morning, for example, we got a sell signal, and then it very quickly reached the free profit target. So I closed my position, or I closed maybe 3/4 of my position, right? Then we had a buy signal, right? It hasn't yet really reached the free profit target, so it's still valid. So we're still there in a position that would make sense to be in. Same thing for the NASDAQ 100. I can show you that here as well, and really, quite frankly, just about anything else that you could imagine. So let's have a look at maybe Palantir. I know that's a popular stock here right now. So Palantir, let me just, I'm trying to go to a different screen so I can show you this in real time so you can see what this looks like. So here's Palantir. I don't know if anyone here likes Palantir, but here is a Palantir stock. You can see this is an intraday chart. So we had a sell signal. This was yesterday morning, August 19th. And the stock obviously had been plummeting. If all I did is hold it to the next buy signal, I'd be up. I would have made 11% on the downside, and we now received a new buy signal. So watch this. We've got a new buy signal, and this one actually is a bit more volatile. So I'm going to adjust the profits and the targets there. That's what we automatically do. So you can see we had a sell signal, quickly reached a free profit target, and I could have trailed it, right? So these are, Palantir is a pretty volatile stock, so we tend to trail those. Buy signal on the 20th of August, and you can see we've reached a free profit. So that's about an hour ago, actually almost exactly 1 hour ago, received a buy signal. We've now reached a free profit target. You can see when the buy signal prints, it automatically gives us the free profit target and the trailing stop automatically all at once. And right now we've reached a free profit target. We can close half or 3/4 position, and I can leave the rest of it on either until the next sell signal comes, or if I want to be more conservative, I use the purple line as my trailing stop. And you can see the purple line is a trailing stop. You can see how well that holds. This is not, I'm not curve fitting this. This is literally just, it's pretty crazy when you use the right algo, what can happen, because the algorithms out there are using this as their guiding light. So that's what we have here. Now, I see a bunch of people saying, that's great, how do you use this? Well, what we typically do is we give people access to this indicator. So if you would like to have access to this indicator, all you really have to do, I'll give you a link for it, and then we can give you access to it. There's nothing to install here, for example, on TradingView. If you want to use it on Thinkorswim, you can install it there. Metastock, it's available there as well. And on Metastock, they just give you access. On NinjaTrader, you can install it as well. So depending on the platform, we either just give you access to it, or you can install it using the file. So it's really simple. Let me just quickly walk you through this so you know exactly how all this works. The trender indicator is really designed for trading. So if you are someone who trades and you're directional, you use leverage, you use options, future, you use stocks, use ETFs, you're in the momentum game. That's for the most part true for most of the people. So the trender indicator identifies trades in futures, in stocks, in ETFs, and of course you can use options. And we teach our clients how to use this with options. It's very simple. We just simply do at the money calls or puts, or at the money call or put spreads. We do monthly live sessions as well to teach people this. We send out some trade alerts as well along the way, and you can get a full 12-month access to all of this. I will just tell you that once you get this, and we give you access, you also have access to what's called the 3x triple play strategy. That's an additional 3 trade strategies we give you in addition to the indicator, a short-term strategy, a swing trading strategy, and a long-term strategy as well. And along with all of that, you also get checklists and a specific plan for maximum success in the markets. We have a live trading session we do at least once a month. We just did one, I think, this week actually, or a couple days ago. We'll do another one real soon, and they're all recorded on the members page. If you feel like this is something that you can use, we'll give you immediate access as soon as we hear from you and we see your information come through. All you have to really do is go to thesteadytrader.com/trender, and for literally just $397. We give you a full year's access to the indicator, unrestricted, unlimited access. You can also use PayPal, of course, and all you really have to do is go to that link there. It's the steadytrader.com/trender, or you can call 401-203-7389. If you feel like you need to take a minute, if you have to jump to a meeting or something, you can always put your name and your phone number in here in the chat box, and I'm sure that could be relayed over to our team. So yes, it's exactly, Mary, you're right. So let me explain this one. That's a good question, and I'm going to imagine that this is probably a question that other people have as well. So let's look at Mary. Mary's asking, let's just look this live trade literally right here right now in Palantir. Like, I'm not making this up. You can see it's live ticking, right? So as you can see, this is not hocus pocus. It's actually real. So you can see we had a buy signal in PLTR, okay? And you can see that it's reached a free okay, let's do this quickly. Can everyone see? Give me a quick yes. Can everyone see the buy signal? And can everyone see that the free profit target was reached? This is not, I'm not making this up, right? This is all live, like literally right here, right now. Can you guys all see the arrow? Can you see the free profit target? Can you see the trailing stop? You can all see that, right? Okay, good. Now, if let's say I bought PLTR, or I bought 2 shares or 4 shares, or I bought 2 call options, or whatever the hell you want to do, right? We'll talk about options in our member sessions as well. I would have now made about 2% on that stock on the first half. And of course, if it would have been options, it would have probably made 10, 15%, something like that. You notice where the trailing stop is. You see the trailing stop is this purple line. Mary, can everyone see the purple line? As soon as the profit target is reached, and again, at the time the green arrow prints, automatically do the green dots appear and the red dots. As soon as the green dots are reached, which they were reached about 15 minutes ago or so, the red dots turn into a solid purple line. At this point, if I bought, let's look at this, very visibly, very transparent, very honest. If I bought right there, that's the entry point. Look where the trailing stop is right now. The trailing stop right now, Mir, is here, okay? So not only have I now closed half of my position, I can no longer lose money in this trade if I honor that trailing stop. Okay? Does that make sense? If I honor that trailing stop. So right now, the worst I can do is make about 0.6% on that rest of my position. If I close it right now, I'll make full profits on this. Pretty simple, right? Now, how do you scan for this? We look for the movers of the day. In our next member session, we teach this every time. It's super simple. It takes like a few minutes to trade to scan for stocks. John, we talk about those settings in the member session, so please make sure you join those. But typically between 3 and 4% stop and about 6-7% targets on those ones you're asking for. So that's how all of that works. Let me make sure. Dave, are we good on time here? I decided to be right on the money. It's 6:39 right now. You said 39 minutes.
Yep, right on time.
Perfect. If there's any other questions, folks, type it in. I'm happy to chime in. Otherwise, I know I want to honor Dave's timing here. So hopefully this was helpful for everybody. This is live again. I'm not making this stuff up here. Hopefully it's helpful, and I appreciate the opportunity, Dave.